We're all aware of the resource boom. There's nothing, everybody here knows that we don't need to spend much time on it, but we ought to look at what's going on here. We all perceive it to be an emerging market driven, GDP correlated, bull market and commodities, and these are all nice returns. You see the block models in the back of all these charts I'm going to show you, that's the supply, the annual production. It's interesting, of all these, everything is growing really well except for this one right here. I would be investing in live cattle. After the cull in 2009, cattle price collapsed, killed all the cattle, and now the price is going up. We've got more people in the emerging markets eating beef, blah, blah, blah. Our in-house estimate is 150 by 2014. It's difficult for me to do this. I usually walk around and pace, so I'm kind of trying to stay within range of this and still be part of that. So you have to excuse me here. There are three very important aspects of the resource boom that are not fully appreciated. The first is simply the nature of bureaucracies. We all hate bureaucracy. We all know bureaucracies. The simple truth is bureaucracies don't move until they absolutely have to. They always wait until the pendulum is pushed so far out of line that they're forced to react. They then whack the pendulum. It goes too far to the other extreme. We're seeing this now. We're about to see a massive, extraordinary infrastructure replacement, recycle, rebuild, restoration, expansion going on in the United States. This is because politicians in the United States have been loath to raise taxes, and so what they do is they pass the requirement off to the next generation. Well, now it's gone on, next generation of politicians, that is, which is every 2 to 4 to 6 years. And so now what's happened is it's gone on for 30 years. We've got natural gas pipelines exploding in Burlingame. We've got cities submerging from broken water pipes. And if you consider what we're looking at here, it is absolutely stunning how much replacement needs to be done. We have more than 400,000 miles. These are not kilograms, not kilometers. We're talking about miles of oil pipeline that has to be replaced. We've got a natural gas pipeline. We have 103 nuclear power plants that are all ready to be replaced, right? We're going to require so many specialty metals for these things that you cannot believe it. The last one is one that I'm very interested in. People are always loath to include in their thinking. Everybody thinks about fiat currency and how badly the US is doing for how badly it's printing, and you know, the Russians are calling us parasites on the global economy. The Chinese have words for us, so does just about everybody. But the simple truth is, people ought to look at what they're doing. Why aren't you going? Where do I aim this? Did I break it? I need help. Good. Thanks, Ben. Is it working now?
Yeah, is it? Did you fix the next slide?
Nope.
Oh, that's okay. Just get this.
Oh, well, they're giving me another printer. This is the rate at which everybody is printing. It's interesting that when you look at the BRIC nations, which are carrying the world market right now, and it's true, they're doing great guns. We've got Russia printing at 28% and claiming they've got a 10% inflation rate. You've got India, Brazil, China, they're all printing in excess of 15%. And yet their inflation rate, they're lying as bad as the United States is. Now, there's no doubt that you can, there's no way humanly possible that Russia can print at 28% and claim they have a 10% inflation rate. That's just not possible. Eventually, where the rubber always meets the road with monetary inflation is with resources. And that's the underlying trend that's pushing everything along. Now, what's happening is, are we working again? I broke it. We're getting closer. Okay, how about if I just signal it?
Okay. Do you want the next slide?
Please. There'll be a secret signal. I'll rub my nose. All right, so what we've got here is we're getting into some specialty metals here. We're going to talk about 48 different metals tonight because that's how many we follow. What we've got here, these are the transitional specialty metals, the ones that we call vaguely industrial in nature, in that what they are is they're really leveraged base metal production. We've had people talking about molybdenum and tungsten tonight. They've had nice runs over the last decade. This is all 10 years on. Magnesium, manganese, these things are all extremely leveraged to base metals. Oh, it worked. Now we get into the really fancy ones. Get into the antimonies, the telluriums, the indiums, the zircons. These returns are absolutely stunning, and yet nobody in here knows how to invest in it. Why is that? The answer is because It is very difficult. I don't know if I'm looking at it now, but I don't have it. Can I have it back? There you go. Okay, these are the demand drivers for specialty metals. Thanks. At the end of the day, all we're looking at is the endless pursuit of higher quality, ever more efficient devices at ever lower prices. This is, by definition, capitalism. But the important thing is the second point here. People have a tendency to still think of technology as something that's done by college kids in their parents' or grandparents' garage, somewhere in Palo Alto, south of Stanford, and everything is bitchin'. But the simple truth is, it's not anymore. It's all driven by very, very sophisticated material scientists and metallurgists, and they are operating on massive budgets, and it is very, very important that you understand this concept. In 1992 to 1995, we had a massive explosion in computer processing power. At the same time this massive expansion in capacity was effected, we had a collapse, an absolute collapse in processing power price. 3 or 4 years later, what happens? We hit a very significant increase in the ability or the cost and sophistication of modeling and analytical software. 2 or 3 years, what happened was the capacity went through the roof, the price plummeted. The third piece of the puzzle is something I'm going to talk about tonight. That was hard disk drive, data storage. What happened was, when the third piece of the puzzle fell in place and data storage prices plummeted, all the metallurgists, all the material scientists had everything they need to do so much research so fast, their heads were spinning. So I have a contact at Heraeus who told me a couple years ago that he can now do more research in 3 weeks than he was able to do in 12 to 18 months before. This is what's driving this, and this trend is reflected in everything we see. Because all of these specialty metals have very, very unique characteristics, and you put them together in this soup and these magic alloys, and they do unbelievable things. A lot of these things have very limited substitution. We all know, but this is a rare earth conversation. Everybody knows about rare earths, but it's a million of them, about 48 of them at least, that have no substitutes or don't have a very good substitute. And what happens is anything you replace it with is usually inferior. You have to use more of it. In the long run, your product gets bigger or more expensive. This is why rare earth element prices, everybody thinks they're plunging. Now they're still way the heck up on where they were. Because of this limited substitution and trace amounts used, they are simply price inelastic. You have to use it, but you're using just trace amounts, so you think it doesn't matter. It doesn't matter that your cell phone here has 45 to 60 specialty metals in it. You think, well, who cares? I got 1/10 of a gram of this, 1/10 of a gram of that. Well, a big idea that we're going to come back to is that 96% of the recycling value in this is in 4 metals. It's in copper, gold, palladium, and silver. Those other metals we're just throwing away because we don't recycle them. We're going to come back to this point. We have scarcity or byproduct sourcing. Doesn't matter whether we're talking about, well, the great example everybody in this room is aware of is until 2007, silver was a byproduct. It wasn't a primary mine. Now, of course, the price of silver has gone up. People are rushing into it. But for many, many years, silver, because of the depressed price, was always a byproduct of lead or zinc mining. We get down to many of these things. Well, if it's a byproduct, obviously, the price of silver is never going to encourage someone to increase their lead production, for example, or their zinc production. It just doesn't work like that. So they're supply inelastic. Many have dissipative uses, but no recycling protocols. Now, anybody with half a brain knows that the wonderful thing about metals is that they are infinitely recyclable. This means that every time you melt them down, they go back to their elemental state. It's just as good and cheaper than mining them. But we don't mandate this. This is a high horse I can get on, but I don't. The last thing is, and this is the most important point for you to take away from here tonight, specialty metal demand is not driven by GDP. It's not correlated. It is discovery driven. And you need to think no further than this. Go back to your cell phone. 2007, 2008, 2009, global financial crisis. Mobile phone hand unit sales increased. It's true, the average selling price decreased, but the number continued on its growth trajectory. This is going to continue. What happens is you get to the bottom, you cycle back up, and you do it again, only faster. Now, I can talk about this stuff all day long, obviously, but The simple truth is the best thing to do is give you an example. Now, we were talking earlier about the third part of the development program that really made the difference was the hard drive capacity and price. Capacity increasing, price plummeting. This is a result of a metal called ruthenium, which most people don't know about, but ruthenium is one of the minor platinum group metals. You know, you've got platinum, palladium, rhodium, osmium, iridium, and ruthenium. And most of the ruthenium, like most of the platinum group metals, come from South Africa. And the South Africans were mining this stuff, and they go through their processes. You know, they take off the nickel, they take out the platinum, the palladium. There's always some gold there too. There's some osmium. They literally take every single thing out, and what's left is smoke. And they precipitate ruthenium out of that smoke. Because ruthenium had no use for so long, many years they did not even process it. We have no idea how much the South Africans have. They just seem to come up with some when they need to take advantage of the price. But what happened was, the answer for ruthenium and hard disk drives came about from superalloys. Now, we've had people in here that are talking about tungsten and vanadium and molybdenum. These are all components of these third and fourth generation superalloys. But the thing that makes they're all nickel-based, they're all cobalt, you know, tungsten, you name it, they're in them, tantalum, you name it. But the magic ingredient in superalloys is actually rhenium. Now, rhenium is a bizarre metal, and I won't go into it other than to say, by increasing the percentage or the content of rhenium, it allowed these superalloys to operate at a far higher temperature without experiencing creep. This means that the higher your operating temperature, that means the more complete your, let me step backward. Most of these superalloys are used in jet engines and turbines. So the higher the operating temperature you can achieve and maintain, the better your fuel efficiency, the better your weight to thrust ratio, the better the economics of your airline. So they started adding rhenium to this, and magic stuff started happening. The operating temperatures went higher and higher and higher. But what happened was, they reached a point suddenly where those superalloys were becoming unstable. And some genius, don't ask me how, came up with the idea of adding ruthenium to the mix. And ruthenium stabilized the rhenium. By adding ruthenium to this soup, this wonderful alloy, they could stabilize the rhenium and increase the amount. Now, what happened was, that took place in the late 1970s, early 1980s. Well, what happened was a very clever guy at Hitachi said, well, hold on. We've always, you know, our problem with storage is that all of our storage is longitudinal. By longitudinal, we have a very significant area restriction on how much we can put in it. They knew since the 70s if we stacked it vertically, we could increase the magnetism, increase the density, and get a lot more data per disk. Well, maybe this guy at Hitachi was reading about superalloys. He looked at this and said, well, hold on. We got 12, anywhere from 8 to 12 alloys, 8 to 10 metals in these alloys, in these layers on that platter. Let's put ruthenium on it, and ruthenium will stabilize it. And voila. 1 angstrom thick layer of ruthenium top and bottom. This whole unstable thing gets stabilized. We can now stack our bits vertically. And this, oh, I can use the pointer again. And this is your growth in data. This period right here is what we're talking about. Now, the interesting thing about ruthenium, a little metal nobody knows anything about, a lot of people in green industry knows about it. It's involved in a lot of research into solar industry, in solar cells. They're trying to mimic artificial photosynthesis with it. And the one that I like the most, I think has a tremendous amount of potential going forward, is that one of the peculiar qualities of ruthenium is that your body perceives that it is iron. So what they do is they make nanotechnology lattices of ruthenium, and then they hang these incredibly toxic doses of chemicals on them, of cancer treatments on it. They inject it near the cancer, because the cancer is like a black hole in your body. It's sucking up all the energy and all the resources around it. Your body doesn't attack it, the cancer takes it in also, and the heat differential between normal skin and inside that cancer actually releases the treatment. This is the type of stuff that's coming. And this is all a direct result of material science and metallurgy. That's what's driving this. So we come to this question. Everybody in that table right there wants to know why isn't there a bull market in all their metals? Don't you, gentlemen? Yeah. Well, the reason is, one, it's not easy to invest in. It's not easy to understand. There's a lot of mis and disinformation out there. There always has been, there always will be. The biggest reason for this is that most of these metals are traded off exchange. If they're traded off exchange, you have a competitive advantage, and you maintain your competitive advantage by negotiating your agreements with your suppliers. It's very murky pricing. They're off exchange. If they're traded off exchange, that means, oh God, that's not me, good. If they're traded off exchange, that means you can't get a commercial bank to give you a loan because they won't finance you. If they can't hedge it, you've got a very significant problem. As I said, many of these things, we've been through this, many of these are byproducts and are sold forward as codicils of your commercial agreements. This is one of the reasons you got people like Silver Wheaton who can pick up silver for $6 an ounce. You know, they're just stepping in between the commercial requirements in the market and making a wonderful business model. Come back to this idea and stay with this. Pricing is discovery driven. Going back to ruthenium, the price of ruthenium when you could buy it was $60 an ounce. They discovered what it could do for hard disk drives. The price went to $900 within 15 months. That's because the scientists who want this stuff, they said, I don't care what it costs, just get it for me. They didn't even know how much they wanted. So everybody bought like mad. The price went ballistic. And they said, oh, well, we really don't need that much. It's only a 1 angstrom thick layer. So then the price collapsed. So it went 60, 900, 300, 650, blah, blah. You know, it's just all over the place. Right now it's stabilized about 100. And the last thing is this. I could talk about this all night, but we won't go into it right now. Free market economies are in denial about their supply chain. We've been in denial about it for a long time. We went to the lowest cost supplier without any thought given whatsoever to the security of our supply chain. Oh, they're telling me, you're supposed to go like this. No, I'm supposed to go like that. Anyway. So here you go. When we started doing research on, I actually learned all this stuff about ruthenium because I was contracted in 2005 to learn about it. And we got very interested in this. And since that time, we came up with this list of 5 different supply risks that we think are critical. Now, since that time, obviously, as you know, the U.S. Academy of Science, everybody and their brother has come out with lists. We've been following this for longer. We know as much or more than they do because we go out and talk to people instead of just sitting and looking at computers. The 5 risks are obviously sovereign risk. You know, I think Ecuador just joined the ranks of the countries you don't want to invest in now. Scarcity. Obviously, platinum is scarce, but most people don't realize that, for instance, tellurium is scarce. There's no substitute. Well, these guys are here talking about their rare earth projects. Everybody knows rare earths are not really substitutable. If they are, it's one to the other. Usually a loss in performance, increase in bulk. Byproduct sourcing I mentioned, and dissipative use. Your cell phone is a dissipative use, people, because we don't recover the stuff that is really important. Now, Umicore, I have contacts at Umicore. Right now, Umicore is able to recover 14 of the metals in a cell phone. At some point, people are going to wake up and realize we can't just throw these metals away because these are very, very small, very finite supply, and it's going to be a big problem. Of these 48 metals, and why I've been driving around Australia for 2 years having the time of my life, it's because 40 of them are here in Australia. Australia has the most unique geology on the planet, and 90% of the world outside of Australia doesn't have a clue. So we're going around looking at all these projects. Now, I'm out of time, but you guys can read this. The most interesting one to me is this one right here. Product longevity is declining. In 1995, the average life of a home computer was 4.5 years. It's now 18 months. In 2001, the average lifespan of a cell phone was 18 months. Now it's 9 months. Every time something gets newer or greater, everybody's got to have the latest, greatest device. And this is a significant driver. We don't recycle them. This is going to come back and haunt us eventually, but for right now, this is what's making these guys at that table smile again. So this is all stuff that's publicly available. Obviously, this report will be on the web also. almost. There's two equations. I'll give you guys a quick chance to go through that. There is no doubt in my mind that barring an abject collapse of the banking and monetary system in the, globally, we're going to see higher resources prices. You might as well just think about it. We have a situation like, for instance, here in Australia, my friend Barry Dawes has this great chart. We have more money in savings than is the value of the ASX 300. Well, when people clue into the fact, you go back to how fast everybody's printing, most of the world is a negative real interest rate environment. When people finally figure out that they have the dubious distinction of paying taxes to let the government screw them out of the purchasing power of their currency, they're going to think, well, I have to put that money somewhere. Resources are going to be one of the prime destinations. Australia is obvious as far as we're concerned. Ms. Gillard notwithstanding, sovereign risk here is minimal. And what we've been very interested in here are gold. Obviously, we like gold companies. We like specialty metal miners. We think there's going to be a tremendous amount of merger and acquisition coming down the pipe. Part of this is going to be because mid and large cap companies are about to realize that, hey, I can just use scrip, corporate fiat currency, to buy all this real stuff. And they're going to. So I'll leave it right there. Merry Christmas, guys. Here's some companies I would have you look at.